All right, thank you all for having me here today. Is everything good with the microphone? Maybe I'll move this so I don't get a double mic. All right, so I am Emily Rogan. I am with United Policyholders, and I always like to start and say that while we have a very insurance-y name, we're not an insurance company. We're a nonprofit 501c3 organization. Our mission is to be a voice and an information resource for insurance consumers. We operate nationally, so we're very busy. We've been around for 25 years, and I always like to say we're not for profit and not for sale. And what that means is we are a nonprofit organization. We don't sell insurance. We don't take money from insurance companies. And I think that's a really important point to make as I start talking about what really matters in insurance. We are funded by donations from individuals and businesses, and also grants from community foundations or other foundations. We'll take it as long as it's not an insurance company. And while we are a very small organization, we have a very large volunteer corps, which is made up of both previous disaster survivors, people who lost their home, had to file insurance claims, learned way too much about insurance and want to pay it forward, and also professionals who specialize in some sort of insurance, either insurance law or the claim handling process, who will keep us current in what is going on in different states. So we have 25 years of experience, and we're helping people and businesses after disasters, but then we're also providing subject matter expertise on this very specific part of recovery. And it's a part of the long-term recovery, and it is long. And then we also, keep an eye on the insurance marketplace, what insurance companies are doing. Are they pulling out of certain areas? Are they slicing coverage in policies, that sort of thing? And then also standing up for consumer rights in both the public policy forum and in the media as well. And we get this work done through our 3 programs. Our Roadmap to Recovery program is our largest program. Helping people after disasters. We are currently working in both the Valley Fire up in Lake County and the Butte Fire in Calaveras County. They had wildfires last year. We're just gearing up to do our 1-year anniversary workshop for them, which is usually done prior to the 1-year anniversary, so people can get their insurance business taken care of, so they can absorb what the anniversary, as they will. And then also I just got back from Idaho, where they had wildfires last summer as well. Same thing, just helping people navigate the insurance process. And it's a long one. It usually takes more than a year, sometimes more than 2 years. So the information that I'm giving you today is so that if you ever have to file a claim, you have your insurance in order, you have a little bit of knowledge about how to use it, so that going forward, it'll be hopefully as smooth as possible. So I'm here today with our Roadmap to Preparedness program, passing forward lessons learned, what people wish they would have known about their insurance when they've had a loss. And then finally, we do have an advocacy program, which is a really great part of strengthening the laws for consumers so that not just the insurance company's side is heard, but yours as well. We're standing up for you. So our key messages tonight. And I like to start with these just because, so that we're all on the same page. We're not an anti-insurance company organization. We just want it to work for you if you have to use it. And so the key messages are that insurance ads gloss over exclusions and limitations. It's not what you see on TV. They don't just, you don't snap your fingers and you get a check. That's the advertising portion. It's a lot more complicated than that. And the majority of disaster survivors find themselves underinsured by a lot. So when we're talking about a natural disaster where there's a potential of having your home burn completely down to the foundation, or an earthquake, a lot of times people don't have enough insurance to rebuild. The government and charitable aid organizations will not cover the cost of rebuilding your home if it's destroyed in a disaster. FEMA grants are capped at $33,000 and they're income dependent, and then SBA loans, you have to pay them back. And those are the 2 big government aids that come into play after disaster. And the next point is that the law and reality are not in sync when we're talking about who's responsible for setting your limits? It's very common for us, and it's, in my opinion, that's the way that it should be, that your insurance agent or broker has the responsibility of setting your limits. They're the professional, they know what's, that's their business. But in the law in California, it says you, the homeowner, are responsible. So it falls onto you if you end up being underinsured, except for in very certain circumstances where you have a documented relationship with your agent. And I'll be talking about how to put that in place. And that's the second one, that oral promises by your insurance agent that you're fully covered is useless after the fact unless you can prove that you had that conversation. Because if it was just over the phone, there's no record that you asked for to be covered for a total loss. And then finally, recovering from a disaster is much easier when you have records of what you had before. And we have on the back table, we have our home inventory app cards. So any sort of records, whether it's pictures or photos or anything in between that you have off-site, so if something bad happens, will go a long way after if you have to file a claim. So those are the big key messages. And we'll be getting into how do you really make sure your insurance safety net is there, and it's not just, oh, those are great messages, but here's what you can do. We have actionable steps for you to take. Because recovery is very hard, and it takes a long time, and if you have insurance gaps when you're going through it, it just makes it a harder process. And these are the common problems that we see almost after every single disaster that make it very difficult. Underinsurance, by far the #1 problem we see. And that's just, you think that you have enough insurance, you've been paying for it for 20 years, maybe more than that, but it's just not enough. The amount of insurance you have is just not enough to rebuild your home. Other problems we see is that it's a very confusing and frustrating process. A lot of times the adjusters are trained to deal with smaller losses, and when we're talking about big losses, they're still using the documentation requirements as if you still could go into your home and see what was damaged and destroyed and take pictures. And that's not the case after a disaster. You'll have multiple adjusters. These are common problems we see: disputes over methods of payment, delays in communication, delays in getting money, and then also you have this intertwined relationship with your mortgage company too, where if you have a mortgage, they are entitled to, they're named on your insurance funds as well. So it can get really complicated releasing the money. So we see all of these problems, and we know they exist. In 2007, after the wildfires, we started to document these problems. And so we started doing surveys along with our workshops to just try and see how bad the problem was. I mean, we knew underinsurance has existed ever since the Oakland-Berkeley firestorm, which was our first disaster. It was a problem then, and it continued to be a problem, but we didn't know in how large this problem was. And we found out that it's really, really big. So in 2007, 75% of homeowners that we surveyed reported that they were underinsured by an average of over $200,000. And it's a very nice community in San Diego, but $200,000 is quite a bit of money to be underinsured for when you've been paying for insurance that whole time as well. And when we did outreach on these facts, we reported them as over $100,000 because we thought that was just such a large number that it's really hard for people to grasp how big that is. But a couple years later, we were working the 4 Mile Canyon wildfire in Boulder. Again, 61% reported being underinsured by an average of, again, $100,000. So that's a very large amount. 2015, the wildfire we're currently working on, we did a 6-month survey. The other two are a year. We usually do one at 6 months and a year to track the progress. Again, 53% reported being underinsured, and the average was over $100,000. That's really significant because the cost of repairing homes is a lot less than it was in Boulder and in San Diego. So it's a larger percentage of the total home value of what it would cost to rebuild. So hopefully those will scare you into doing some action. And so our do's and don'ts when buying insurance, these are the things, again, a little bit repeating, but we want you to really hammer home these points. Don't underestimate the cost of replacing what you have, or blindly trust that your insurance agent has has you covered for the amount that you have. You can raise your deductible if you need to decrease the amount that you pay every month or every year. So to decrease your premiums, you can raise your deductible. But you have to take the time to shop for full coverage. When you're shopping for insurance, it's not about price, it's about coverage. That's really what you want to make sure you have. And then be aware of exclusions and limits in your policy, because that's where you have your declarations page, which most of us are fairly aware of it. They send that to you every year. But your policy is the fine print, and that's where the major exclusions are. And you got to make sure that you're aware of those things. So your action steps. Buy the right kind and right amount of insurance. We call that insuring to value. And we have your handout, which I will be going over further down. This is how you do that. These are the questions that you have to ask your agent. Inventory your assets. So, doing a home inventory, whether it's photos or video, very important. Scan your important documents like your insurance policy, anything that would be very hard to replace after disasters, and store them off-site, very important part of that. And then take steps to harden your home. When we're talking about earthquakes, we're talking about strapping water heaters, bolting foundations, doing anything that you can, as much as you can, to retrofit your home. Okay, so getting into it, how do you make sure you have the right kind and right amount of insurance? The first thing you want to do is take a look at your declarations page. I'm guessing everyone in here, if you are a homeowner, that you have insurance. And if you're a renter, that hopefully you do have renter's insurance. If not, or if you are a renter, the contents coverage C, and the ALE, those are the 2 points that will be relevant to you as well. So it's really important to take a look at your declarations page, whether you're a renter or a homeowner or own a condo, whatever your situation is. You want to have some sort of idea of what your insurance is. Don't just keep paying it and put it in the drawer. Take a look at it. And your coverage A is the most important part because the other categories are usually set as a percentage of that coverage A. And so how do you do that? How do you make sure? So you're going to look at your declarations page. Your coverage A is your dwelling, and you're going to see a number there. And you're going to check that number. You're going to make sure, you're going to do some homework to see that that is enough. And how you do that, and when we're talking about homeowners, we are mostly talking about wildfire or house fire. Both earthquakes and floods are excluded in most homeowners policies. And I'll get onto earthquake insurance in a little bit after these, but when you're talking about your homeowner's insurance, checking your coverage A, one way you can do that is to get a local contractor to come out and estimate, how much it would cost to rebuild your home from the ground up. So they know what it costs, they know what the construction limits are in your area. If you can have them come out, that would be great. You can, better yet, get your insurance company to send somebody out to do a replacement cost estimation of your home. And if you have a higher end home, they'll do it. And if you don't, it never hurts to ask. The worst they can say is no, you're in the same position. But having that conversation is a good point to say, I want to make sure that we get an accurate replacement cost estimate of my home in case there is a total loss. I want to make sure that my limits are adequate. So if you can't or don't want to get a contractor to come out, or have your insurance company send one out, you can do the rough math method, which is calling some contractors. There's a lot of building in the Bay Area right now, and ask them what the price per square foot of building in your community is, in your neighborhood is. And they'll know, they'll have a rough number. And so you get that, you take your coverage, divide it by your square footage, and you'll have how much per square foot you have on your insurance. And so you'll compare that to the number they give you, and if it's within the ballpark, if it's within, $50, maybe within $100, you'll definitely want to talk to your agent about that. But if it's close enough, you'll get a general sense that you're within the ballpark, and that's a good thing, because we're talking about most people being underinsured by $100,000, maybe more. You'll be able to gauge where you are there. Other ways you can check if you have enough coverage is with home replacement cost estimating software. And that's going online if you're tech savvy and you don't really want to talk to anyone, but you do want to make sure you can use these softwares to put in your unique characteristics of your home, and they'll spit out a number. So they do cost something. Whether it's the right choice for you or not, we're not promoting any of these companies. We're not promoting anyone that we list up here, but I want to say more than just, hey, Google replacement cost estimating software. Here are 2 of them that will come up, and that's what you'll do. You'll enter in your square footage, what your house is made of, that sort of thing, and it'll spit out some number. And you'll be able to compare that to what your coverage A is to see, again, if you're within a good ballpark. But the method that we prefer is the human method. Which means spending time with a good agent or broker to really make sure that your coverage is right. And so if you love your broker, that's great. We want you to be able to have that conversation with them. If you don't really like them, you can still call them up, and you want to create this special relationship with them so that you have made it clear that you're relying on your agent to set your limits. And so you'll take the time to describe your home, and then what I would recommend is doing a home insurance checkup, which is the handout that we gave to you tonight. And it's a bunch of questions, 15, and they're just different parts of your policy that may come up, and so you want to just go over them. So number 1 is, will this policy be adequate if I have a large total loss? You want to make sure you get through these questions. And they're all on the different types that will hopefully trigger him to make him or her, your agent, to double check your coverage, and it'll signal to them that you are paying attention to your insurance, that maybe they should take a little bit more time to look at your file and make sure that you're covered. And what we would recommend, not only having this conversation, but the important thing to do is to take notes and then follow up in writing. And writing can be an email or it can be a letter, and just say, thank you so much for taking the time to go over my insurance with me. As you know, my goal is to be covered for a total loss. Make sure your insurance goal is known, and make sure that there is some record. Email's great because years down the line, you'll be able to look back in your sent folder and see that you sent this email. So if anything does happen, you'll have that record. But it's important to make sure there is some sort of documentation there. And then always, you're going to have to follow up if they give you reasonable recommendations for increasing your coverage or decreasing your coverage. If that's the case, that'd be nice too, to get a little money back. But if whatever their recommendations are, you do want to make sure that you follow them. And then if you need a second opinion, if you have a conversation with your agent and you walk away going, I don't know if this guy's got my back, it just doesn't feel right to you. We have a service that is a B Corp that contacted us, and a benefit corporation, so they are for profit, but they give most of their profit or a portion of their profits back to nonprofit organizations like our own, or like a charity of your choice. It doesn't, anything that you love. They will connect you with an independent agent or broker in your area. So if you just need a second opinion, this is one way you can get one. And the website is on the board. It's yapaquote.org. And so you could use this for a second opinion. You can use this if you just need to find a new agent if you don't like the one you got. And there's nothing, the best thing you can do is to get a couple quotes, because if you haven't taken a look at your policy, all policies are different. Different companies have different language in them. So it'd be always good to get a second opinion. Okay, so we're going into coverage C, which is your contents coverage now. And so as we said earlier, your contents coverage is a percentage of your coverage A. So, those limits are just set as a formula. So you want to make sure that you have insure your contents to value. Inventory your home, again, so important to have some sort of record. Be aware of sub-limits within your policy. There are quite a few caps on items. And then consider scheduling valuables. And what that means is adding extra insurance for very special things that you have. typical sublimits that are in policies, and the dollar amounts they will fluctuate within different policies. So this is just one example from one policy. But almost all of these items are capped in your policy. How much that cap is depends on your individual policy. But $200 in money, $1,000 for jewelry. So if you had a total loss, all of your jewelry, you would get $1,000 for it. That's one of those items that you would really want to consider scheduling if you have valuable jewelry or jewelry you would want to replace. Firearms, $2,000. And then business personal property is another really important one, because if you have a home business or you work from home sometimes, know that you will have a cap of, and it does hover roughly around $2,500 to replace your belongings. And that's an interesting thing to keep in mind for that too, is if you have a business that is similar to your hobby, so you have say for instance, you are a landscaper, but you also have a really great backyard. There are some items in there that will create a gray area that can be difficult to address after a loss, because your insurance company will say, oh, well, you're a landscaper, those are landscaping equipment, that's all business personal property, you're capped out. So you want to make sure that you have documentation, and the best thing you could do is to get a schedule, get a rider for those items. And that's one of the questions on the sheet. So common things that people add extra little bits of insurance for are up here. Fine art is a really good example of it. Any cameras or electronics, jewelry is a really big one as well. So if we commonly use the example of anything you really love, anything you collect that that you have a little bit more of than maybe your neighbor. Sometimes that's what has to be scheduled. So in addition to adding schedules to your contents coverage, you can also add endorsements to your policy. And what that is are little extras, and there are tons of them that some are just included in your policy, some you have to add specifically, but these endorsements add coverage to your policy. And the really important ones that make a big difference are up here. So building code upgrades. It'll cost more. You're insuring your home for what you had, or what you have now, what you had if you have a loss. So the exact same structure. So building codes, you might need, if something happens, you might need to upgrade your wiring or your plumbing or something of that nature. And you'll need building code upgrade to pay for that extra, because it's something that you don't currently have in your home. Sewer backup coverage is something that you would be very thankful you had if you had to use it. Flood insurance is another one. So water damage is one of those really tricky parts of your policy, where different companies have different language, and some are carving out water damage. So unless it's something that happens very suddenly, an accident where something bursts, a pipe bursts, then that most likely is covered in everybody's policy. But if we're talking about any sort of trickling water, it's probably not covered, and that can cause the most damage. So you really want to make sure that when you talk to your agent, you know what your water damage coverage is. And when we talked about getting a second opinion, if it seems like it's really, just a little too tight of a definition and you'd like broader coverage, that's when you'd want to get that second opinion. Other endorsements, earthquake and earth movement. Replacement value on your contents, that's pretty standard these days, but you just want to make sure you do have replacement cost coverage and not actual cash value, which is the lesser of the coverage types. And then also extended replacement cost coverage. And that's really important, because what that is it's a percentage that will boost your coverage A if you have a total loss. So if you have, say $500,000, and I'm using very round numbers, and this is the part where I wish we weren't filming, so if I goof up the math, it's not documented, but if you have $500,000 in your coverage A, which would most likely be low for this area, and you have an extended replacement cost coverage, if you have a total loss and you have 50%, you'll get an extra 50% on top of that. So you'll have more, because ideally, if you have a total loss, there will be more expenses to go by. So that's the thing. And when we're talking about disasters as well, there will be more of a demand for rebuilding, and so things may cost more as well. So that's a good one. So I have one question, I'll take it, but I'll take the rest.
Are you saying that these are things that we should ask for in addition?
Yes. The question is whether or not you should ask for these. Absolutely. You want to make sure that, and I think most of them are included in the handout. So ask for these items just to double check that they are in your policy, and if not, add them, especially sewer backup, extended replacement cost. We recommend buying the highest percentage that they're offering that you can afford, because that will be another layer of protection if you are underinsured. And then creating an inventory, like I mentioned, we do have an app, and that's one way to do it. And it's picture-based, so you can just take pictures of everything in your home, and then you tap the picture to identify the item. So if you just get around to taking the pictures, that's great, and something happens, then you can go back and use them and tap them, and it'll create your spreadsheet. But really, we want you to use whatever type of technology is most comfortable for you to create that inventory. And if that means taking pictures and putting them on a flash drive and sending them to a friend or family member out of town or outside of your home, then that's one good option. If it's printing out pictures and putting them in a safe deposit box, that's another option. Whatever is good for you. The way that I do it, and it's because when I like to travel, and before I travel, I always have a little freak out that my inventory is not up to date. So I'll take a video and I'll just go around my apartment and make sure I get all the drawers and everything like that, and then I email it to myself. So I know that there is a record somewhere in case something happens. Again, anything is better than nothing. Just be sure to save it in a safe place. So renter's insurance. Do we have any renters in the room? Wonderful, we have a couple. I'm a renter. The most important thing for you to know is that your landlord's insurance does not cover your property. It covers their property. It covers their building, and that's pretty much it. So you want to make sure that you have coverage for that, especially in the Bay Area right now, because you want to make sure your ALE, your additional living expense coverage, is probably more than just what the average amount that they give you is, so that if you had to move out while they're fixing your apartment because of a fire or something like that, you'll have additional money so you can actually still live in the Bay Area. Another question?
Sorry, real quick question. What about a roommate who rents from you?
That's a great question. So a roommate that rents from you, you own the home and you have a renter, their personal belongings will not be covered under a homeowner's policy. And also their additional living expense coverage will not be covered. So a homeowner will most likely be able to collect some money to be able to rent a place while they're fixing their home. The renter wouldn't be able to have access to that money, but if you're a wonderful landlord, you might take them in, just because if not, they might be on the street. And then again, earthquake and flood are not covered in standard renters insurance policies. Okay, so the big one and the big question, we're getting on to earthquake insurance. This is always a very complicated part of it, but it doesn't have to be. It's one of those big questions. Everyone has homeowners insurance, mostly because their mortgage company requires them, but also it's something you really want to have. Earthquake insurance, what we recommend is that if you have a home in a quake-prone area like the Bay Area, like where we are standing right now, we recommend that you do make that investment to buy earthquake insurance. If you can retrofit as well, that's really great, but we do know that those are both very costly options, both of them, and together they also are, but we want you to make a good educated decision and not just assume that they're too expensive, but to really go through your own personal financial decision and see if it makes sense for you to have earthquake insurance. Renters, it's very cheap compared to it. So it's about $150 a year for earthquake insurance for renters to cover your belongings and a little bit of additional living expense coverage. So we think that is, if you can afford it, definitely get it. And then if you own a condo or are part of a homeowners association, for earthquake insurance, you would protect your belongings inside, But also you'd want to make sure that you have something extra called loss assessment coverage, and that means that if the homeowners association either has insurance or has some but not enough, what they can do is they can assess the difference, what it'll cost to repair the main, the common areas and that sort of thing, to all of the people in the homeowners association, and so you might get a chunk of that bill, and loss assessment coverage will take care of that. All right, so to scare you into realizing why earthquake insurance is important, there's about a $602 billion gap in what is insured and what is not, and what is projected to, the amount projected of damage from the next big earthquake. So it usually hovers around 12% of homeowners in the Bay Area have earthquake insurance. And so, I also pulled this slide. This was actually from the CEA put out around the 25th anniversary of Loma Prieta. And it said, and so we often get asked, like, how much does it cost? These are general numbers. It's what their averages are in the Bay Area. So for homeowners, we have in Alameda, $1,802. Renters, $167. That's the average amount that people are paying. It's California Earthquake Authority, which is the most common insurer of earthquake insurance in California. They have changed their options recently too. So they have more flexible options, but I would still recommend working with an agent to make sure that that you're getting what you need, not just shopping for price, because that's something you can do with the additional options that they are providing. So again, it's a personal decision. How close are you to that fault line? What's your home made out of? What's excluded under your current policy? What's excluded under an earthquake policy? How big is the deductible? How much would that be for your home? You really do have to sit down and do some math here. It's not just a yes or no decision. We really want you to make a educated financial decision based on your situation. And then the financial strength of the company that'll sell it to you, that's another big one. So that's important. And then whether it's worth buying, I have a question, we can take it if you'd like.
How does the company that sell it to you relate to the state earthquake authority?
So most insurance companies started pulling out of earthquake insurance after Northridge. And the question is, what's the relationship between the CEA and most insurance companies? So because most insurance companies started pulling out, the California Earthquake Authority was created to fill that gap. And so if there's an insurance company that does not offer earthquake damage coverage, they have to pay into the Earthquake Authority and provide that as coverage. And so it's part private, part public. So that's just something to consider. And then whether or not it's worth buying, you want to know what the replacement cost of your home is, what would be the premium with the different deductible types, and then how much damage would it take to for you to actually get paid under the policy. Now, if you have a $500,000 policy, again, easy numbers, and you have a 10% deductible, that's $50,000 worth of damage that would have to exceed for you to get money. You don't have to pay that money. You don't have to pay $50,000. That doesn't have to come out of your pocket, but the damage has to be more than that for your insurance to kick in. And so that's something to keep in mind. How much additional living expense coverage comes with the policy? That's another good question. And then, are there any first dollar coverages? Meaning, is there any money that will be paid when the earthquake happens? And the big factor that I always want everyone to think about, it's a lot to go over, a lot of different factors, a lot of individual factors, but really, can you afford not to have it? What would you do if the big one happened and you did have structural damage to your home? Would you be able to repair and replace your home? So, if we're talking about a 15% deductible, that would be a lot of money for it to have to exceed. But we're saying if you had that damage and it exceeded the large amount that we're talking about, would you be able to cover it if you didn't have earthquake insurance? because FEMA, again, $33,000 is the max grant that they'll get, and SBA loans, they have low interest, but they do have to be paid back. So so that's the insurance part. You can also retrofit your home. The Earthquake Brace and Bolt program, which is part of the California Earthquake Authority, they have mitigation funds that they're using. They created a program to help give grants to help people retrofit. Now the grant process is closed right now, but we've heard that they're going to reopen it, that they're going to continue offering retrofit grants in certain areas. So I put the website up there. It's always good to check it out. You know, if you go to enough preparedness fairs, they'll be there. You can always ask them when they're going to have another round of grants. So there is money available sometimes to get help to retrofit your home. Worth it if you can find the money. So you can't stop natural disasters, but we want you to have enough insurance, reasonably complete an inventory, and keep your important documents off site, and that'll make you better prepared. And then there are 2 additional points that I want to make, 2 more slides. And these are common questions that we get. So what if you're non-renewed? So that means, so your insurance policy is an annual product that you buy. You buy 1 year of coverage, and then typically they'll just send you a renewal notice, and from there you're buying another year of coverage. But sometimes the insurance companies don't want you as a customer anymore, and so they'll non-renew you. They'll say, well, thank you so much for paying us for 20 years, but you know, you're pretty close to that brush there, so we're gonna say, we don't want you as a customer anymore, and that's it. And it can be very shocking because people are very loyal to their insurance companies. Insurance companies don't tend to be as loyal. So the thing we want you to know is don't panic. They have to give you 45 days notice, and from there you're going to comparison shop. When we talked about getting a second opinion and finding an agent or broker, you want to make sure that you try and find coverage as soon as you can, and you can do that by finding an independent broker. Because what we find is a lot of people who have been non-renewed, they will go to their State Farm agent who can only write a State Farm policy and ask for them if they can cover them, and they'll say no. And then they'll go to an Allstate agent who can only write an Allstate policy, and they'll say they won't be able to. And these are just examples. I'm not using specific insurance companies for any reason, just because they're big names. And they'll say no. And people will assume that all insurance companies are going to say no, when in fact there are independent brokers who can write insurance for many different insurance companies, and they can save you the time from trying to go through this process again and again. They can just take your information once, shop it around, and see what options are out there. So don't worry about that. You do want to file a complaint with the Department of Insurance, though, so they know that that specific insurance company is pulling out of a certain area. It's the only way they'll get those statistics, and that's really important. And then on the flip side, if something really bad happens and you do have to use your insurance, we want to give you a couple tips just to try and keep in mind to get you on the best, your best foot forward, put your best foot forward, or get on the best foot to use your insurance. And the first thing you'd want to do is get a copy of your policy, and then make a copy of that policy, and so you have a working policy so you can write all over it. And mark up where the pots of money are in there, and so you'll be able to know what coverage you have. Hopefully you'll be on a better position after hearing this, and you'll have this conversation with your agent, so you'll be a little informed. But you want to get a copy of your policy, find out what your additional living expense coverages benefits are, because that's your temporary rent that'll get you in a new place. Start a claim diary. We're going to start a paper trail, keeping track of everything that your insurance company says, because if you've had a large claim, it's very traumatic, and you cannot remember everything that you think you will be able to. You shouldn't have to rely on your memory. Write it down. It'll benefit you throughout the claims process. Save all your receipts, because a lot of times your ALE, your additional living expense coverage, is on a reimbursement basis only. And then visit our website. We have tons of claim tips to help you go through it. And this is our website, and we have buying tips on there. We have preparedness tips. We have claim help if you need it. And we also send out a tip of the month, just a little e-newsletter on a different part of insurance. It's mostly preparedness every month. not just property, but other types. So if you're stoked about insurance, we urge you to sign up, and that is my presentation. So thank you, and I'd be happy to answer questions. Yeah, so the question was about other insurance companies for earthquake insurance. There are other ones out there. The California Earthquake Insurance does have some reinsurance, which is insurance on your insurance, and because there haven't been many earthquakes recently, any big ones, they are very financially stable at this point. But you do want to make sure that you do shop around, get quotes from as many insurance companies as you can, and really compare them, see what their deductibles are, see what their language is. ALE is a big one. You want to make sure that they cover that, because some do, some don't. And make the best decision. And relying on your insurance professionals too is one way to do it. You can go over with them what would they recommend. Oftentimes we hear that agents don't recommend earthquake insurance, and that's scary because you at least want to have that option. So ask for it if you haven't been offered it. So yeah, addressing the point of whether or not, when people compare how much equity they have in their home, how much they've paid in, how much is left on their mortgage, versus how much the deductible will be, and whether or not they'll just walk away. That's a really hard question to ask because it is personal, and what we've seen in our work after disasters is people rarely walk away. How much will they have? You'll still owe your mortgage, and you'll still have to now find a new place to live in the Bay Area. That can be very difficult to do. So it's a personal decision. If you're willing to walk away from your home if there's an earthquake, then that's your decision. What if it's a smaller earthquake? What if it's only a 6.0 earthquake and not the 9-point big one? There are lots of different options there, and I know, being born and raised in the Bay Area in San Francisco, I'm not walking away. I'm not moving to Texas or anything like that. I'm staying here. So that's why I have earthquake insurance, and we'll work with that. It's a personal decision for everybody. The question is whether it's still a problem for people to have to explain every type of item that was in their home, especially to out-of-state adjusters. And the answer to that is, yeah, it's still a problem. You never know who your adjuster is going to be. We get a lot of questions about whether or not there are good insurance companies and bad insurance companies. And if you have enough coverage, and the policy is, there are differences in the policy languages, like I talked about with water damage and different places where coverage has been carved out by some insurers, but not by others. But the main thing is your experience after a disaster can very well depend on the personality of the adjuster you get. Are they very experienced, or are they new and only know how to work within the square that has been outlined for them by their supervisor? Do they have money? Do they have the signing authority to write you those big checks and give you a very big cash advance? Or do they even know to ask for that? Do you know to ask for a cash advance? There are all these different scenarios. With the Valley Fire, another thing that we found up in Lake County was that out-of-state adjusters didn't know what, so you have your policy, in your policy there may be deadlines, there's language in there, but the law in California oftentimes extends those deadlines if it is a state or federally declared disaster. And sometimes adjusters aren't aware of what the law in California is, and they just go by what's in the policy. And so, it's really important when we're talking about afterwards for everyone to get educated on what their rights are as well, so that if they hear a no, then, and they know that it should be a yes, they know where to refer to that and that they're entitled to that under the law. The question's about umbrella insurance, and umbrella insurance is liability only. We talked a lot about property damage. Liability is more if someone files a lawsuit against you. And so it's an extra layer of protection that if you have high asset, like a high amount of assets, you want to make sure that you have enough coverage under your liability as well. And so we put that on there. It's not necessarily specifically for disasters, but if you're having the conversation with your insurance agent, that's a good one to have. You also want to make sure your liability for your auto and your home are in sync, and then that umbrella goes over it, so that just in case anything happens, you have enough coverage to, so you don't have to go out of pocket for liability issues. No, not in an earthquake. I mean, I could probably come up with a couple if if push comes to shove, but that's not necessary. Yeah, the question is, how long should your additional living expense coverage last, basically? Ideally, so some policies are a dollar amount. Some policies are a time limit only, and some are a combination of that. So if it is a federally declared disaster, then the state, and I think state declared disaster as well, you automatically have 2 years, a minimum or a maximum of 2 years to use that coverage. And so that's the basics. That's what we and most people who've worked in disasters want the limit or the minimum to be 2 years, at least 2 years that you'll be out of your home until it's rebuilt and you can move back in. Yeah, so the question is, why does it take 2 years, really, basically, to rebuild? So you have, usually you will have in the beginning, in large disasters, it takes a long time for the debris to be cleared. When we're talking about whole neighborhoods that have been destroyed, the debris will clear. The insurance company will usually cut you a check for the actual cash value of your home. So not what it would cost to replace it, but a lesser amount. It's typically a lot less than you'll need. From there, you need to get estimates from contractors, and after disasters, there can be either a shortage of contractors or that sort of thing. You want to get that estimate, and then you have to negotiate from your insurance company's dollar amount, what their first estimate is, to what your contractor needs to be able to rebuild the home.
Okay, so that 1 to 2 years that you quoted.
I would say 2 minimum.
2 years, that included rebuilding the home, not just
Yeah.
paid for. Okay.
Definitely. It includes that 2 years to get back home, not just struggling with your insurance company. Ideally, it won't take that long at all. We want people to get paid quickly. The question is whether, if there's a fire after an earthquake, if that will be covered under your homeowner's insurance. And the answer is yes. The tricky thing there is if the fire only takes down half of your home. And so part of your home is clearly damaged by an earthquake. Part of your home is clearly damaged by a fire, and this happens a lot of times after hurricanes that also cause flooding, another insured loss versus an uninsured loss, where the insurance companies are just pointing fingers like, that's fire, nope, that's earthquake. And so determining what damage is caused by what cause can be very tricky. If there's an earthquake, if there's an earthquake and a fire, and the fire portion will be covered, by your homeowner's insurance, The question is whether or not there have been more insurance companies who are coming forward to offer earthquake insurance. There still is quite a small number of insurers, but talking to independent brokers is the way to figure out if there are more on the market. Typically, we just talk about admitted insurers, which means they are licensed in the state of California to offer this type of insurance. There's also a category called non-admitted insurers who can provide earthquake insurance, but they are, a lot of times it's like a Lloyd's of London, so they're not necessarily based here, but they do offer that coverage. If they're financially stable, then that's still an okay option. There might be more opportunities to get coverage in the non-admitted market if you're not satisfied with what the admitted market is giving you. And that's a really, that gets a little more complicated, so we definitely say talk to an agent and broker, ask them these questions, ask them about non-admitted options as well.
For the CEA policy?
Most likely your homeowner's policy will be enough, because that is the cost that, the amount that you're getting is what it costs to rebuild your home from scratch, and whatever caused the scratch doesn't really matter. So
if I get an estimate from my homeowner's replacement cost estimator, then do I just?
You say, hey, I know that, I've gotten an estimate and it's going to cost me this amount of money to rebuild my home. I want to make sure I'm also insured for that amount for earthquake. I would say, again, talk to an independent broker, because your goal will be to, the National Flood Insurance Program most likely is the most common option, especially for people in flood zones. That will be a pretty there is a map similar to earthquake insurance. They don't vary as much, because they only have one option. So the cost doesn't vary as much by your type of home, as I would say. So with flood insurance, you're looking for, flood insurance through the National Flood Insurance Program has a cap of $250,000. So everyone can only get up to $250,000 worth of coverage. So that's why it stays the same. So talk to an independent agent or broker. The thing there to remember too is that there are non-admitted options as well. So ask for them. When you're talking about there is one agent listed on the National Flood Insurance Program, I'm not surprised by that. But that doesn't mean that you can't expand your search. If someone can write insurance in California for the National Flood Insurance Program, they can most likely place you with insurance. Oh, well, more than every 12 years, I would recommend you getting the estimate of how much it would cost to rebuild your home. I would say, if you do one now and then just check in with your agent on a regular basis. It doesn't have to be every year, it could be every 2 years, and have that conversation with them and say, the last time I got my home checked was in this year. Do you still recommend the same limits? And get it in writing. The one source that we do have is the yapaquote.org, and that's the benefit corporation that will connect you with an independent broker. You can also use a Google search. There are many other ways you can do, but it's really, we don't recommend specific agents or brokers. The important thing though is just to make sure that ask them for recommendations for clients too, and you can always call and ask people like, hey, do you like your broker? Because then you'll at least be able to feel them out. How attentive are they? Right. She's correct. Her question was, how are independent brokers compensated? It is through the insurance companies. The thing to keep in mind for that is by how much is one insurance company compensating them. If one insurance company gives them quite a bit more of a percentage than another one, you want to just make sure you ask about how they're compensated. That's a really good question, because you don't want to just be forced to the one that will give them the biggest commission. That was a very complicated question. I don't know if I could repeat the whole thing. He was asking me to repeat them for the audio. That is a tough one. If your house catches on fire, your first recourse will be through your own insurance company. Whether or not they are able to recoup their costs from your neighbor is typically how it goes, that your insurance company will then go after their insurance company for that, and you wouldn't necessarily go through your neighbor's insurance. But that being said, it's always good to document that you've asked them to take down or are concerned about the brush and trees around their home. How to store important documents that are huge architectural plans? I'm not quite sure about that. Scan them, maybe a scan to FedEx. Can you repeat that so I can repeat it for the audio part?
You can take them, there's a place called Inkstone on Bowditch.
Inkstone?
Scan them.
Inkstone will help you scan them and put them on a flash drive or other documentation. Oh, that's a good question. Do you include your solar panels that are being leased in your home inventory? You definitely want to make sure that you have documentation that you had those. Most likely if you incur, my guess, I haven't dealt with this specifically, but my guess is if you have to incur any expense because your leased solar panels were damaged, that may be covered by your insurance. But most likely that because they're leased, they're not your property. You wouldn't replace the panels, just your portion of whatever you would have to incur because of that. But a lot of times, some companies, when we're talking about big disasters, will waive some of those costs, like your garbage bins will burn up, and your Comcast cable box, they can have that, but that will burn off. We're all on the same page. Those types of things that normally you would owe something because they were damaged. A lot of times when we're talking about big disasters, those companies will waive your fees because they were lost? That is a question that I'm not 100% sure on. So the question was about slide damage, and it can be tricky. Flood insurance typically will cover slide more than earth damage, earth movement, but it depends on what it is. If we're talking about a chocolate shake type of thing, so rain saturates it and it's more liquidy, that's one thing, as opposed to cake of like chocolate cake of moving. It really depends on what causes the slide, what the consistency is sometimes. So I'm not 100% sure, but ask your insurance agent, make sure you're covered for that. That's a good question. How do you make sure your insurance company is stable? For most admitted insurers, they are required to have reinsurance, so they're good to go. AM Best is another, there are a lot of financial rating services. AM Best, you can contact the Department of Insurance and ask them for help as well. An independent broker, so someone who can write for many insurance policies, you can, so they can write for many different insurance policies. So you can ask if someone's a captive agent, which is the examples I gave earlier were like State Farm, for example. State Farm can only write State Farm policies. We know of the Benefit Corp of Yapacopia. That was the slide that we had. The question is, how much does the earth have to move for it to be considered earth movement? And I would say I'm not sure, and I would check the language in your policy. Most likely there is not a amount in there. It'll just be considered earth movement. It's difficult to say because if you've had damage and it's from earth movement, it's not covered by your homeowner's insurance policy. So hopefully it moves such a small amount that it doesn't cause damage. That's correct, under your homeowner's insurance. If you live too close to a creek, or if you have built too close to a creek, you're saying, I mean, honestly, it doesn't matter if you built too close or if you are too close, because that creek can reach you in a worst case scenario. And when we're talking about flood damage or water damage for your homeowner's insurance, if it comes from above, typically it's covered. If it comes from below, typically it's not. So that's one way to think about it. That's not a silly question at all. Her question was about creeks rising due to global warming and the bay rising and whether that's covered or not. It's not. If it's, flood's a flood. Anything that comes from below will not be covered by your homeowner's insurance. That's one reason that if you are close to one and you are concerned about that, to purchase flood insurance. Because we are talking about, that will typically cause quite a bit of damage, to multiple homes, not just, possibly coming up and getting one. I'm not quite sure. The question is whether or not the homeowner's market will cover knob and tube wiring in older homes, whether they're just kind of cutting out and saying they're not going to cover them. I would say if you know you have that type of wiring in your home and you have homeowner's insurance, then that's a good thing, but make sure you have that code upgrade coverage, because that's something that will most likely have to be changed if something bad happens. Who's writing for that specific house scenario, I couldn't say. In an earthquake, if a tree limb falls on someone's house because of an earthquake?
Yeah, both things. If it's not an earthquake and if it is an earthquake.
That's a good question. Whether or not, okay, so if a tree falls on your house just because of possibly the drought and wind, anything, you name it, that's covered by your insurance. If it's caused by an earthquake, well, I would assume that the roots will hold in an earthquake, and that the tree would be able to. I have not heard of that scenario, which is a really good thing. But there some policies, getting into that fine print, some policies have exclusions for acts of God, and that would be one of those weird things where they'll exclude something if it's an act of God. Scenarios.
Tree limbs down all the time.
Yeah, so tree limbs are fine, I think. I'd be curious to see if trees would fall in an earthquake. I don't know. If you're
Goes after PG&E?
well, that's a tough one. Most likely, you'd have to go through your insurance company first, and if they say no, you go after PG&E. And most likely there would have to be legal assistance for that one.
Could you mention
Oh, we were talking about, the question was whether or not if a PG&E power pole falls on your house during an earthquake, who would be liable? And that was the previous question. Very good question. You guys are getting...
Learned in another workshop that
If the pole is in concrete, that most likely if there's an earthquake, the wires will just break, not the pole. But if it's in the earth, then, can you repeat the second part? Then the pole will
or on
most
a
likely,
slope, it's more likely.
or on a slope, then it's the pole that will most likely go down. Thank you for adding to that. Okay, any other questions?
Thank you so much.
Well, thank you. Thank you for being a very engaged audience. I appreciate it very much.